Alright, welcome back. This is Learning to Read Price Action Basic Series Part 2. In Part 1, I defined a few significant bars that designate a significant supply-demand event. I showed how to mark them out. I talked about the essence of these bars. It's really simple. Hard down, hard up, tail down, outside bar, wide range bar gap, mirror bars, which is the same as the tail. So that's what we did in the first session. Talked a little bit about reading. I want to emphasize a few things here. This is just like swings. You come to a chart and you want to map it. So notice if I start looking at something like this and I want to map swings, it just looks all crazy, right? We start to do this and we say, there's the reaction leg. Look, we can begin to map the chart. We can begin to skip everything. We spread things out. We say, okay, where's the minor? We can look at the minor via the reaction leg. Right? So that's mapping a chart with swings. Notice how it spreads things out. All you see is the swing. Well, price action is meant to do that same thing for us. It's supposed to take some of that intensity that we spend so much time with and just spread things out. So we're looking from one significant event to the next significant event, and we're judging buyers and sellers like that. It spreads things out, and then you can skip all the noise and all the turmoil and all the tick, 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 tick. All right, next thing I want to point out, we're going to make distinction in this. This is going to be this lesson. So in this lesson, we're going to make some distinctions here. We'll do a little practice, actually reading some recent markets, and we'll finish up with some live stuff that we can actually watch. Actually, I see one on here that we can watch. But let's go and talk about relative. Just like swings, make the distinction of minor and major. Major is the largest in your frame, meaning the largest hard down, hard up, the largest tail, the largest gap, the largest set of mirror bars. Minor is the next largest. Now you don't have to find all of these. If you want to, you can just look at tails. And what you'll see is you'll find the largest, and it'll be an agenda. It'll be just like swings. You'll see they relate to each other. Relative means about the same size. So let's use this chart for an example. This is the current yen chart. If we look at this market via gaps, just look. What is the biggest, ugliest gap on the chart? That's going to be your major. Right? We can find the biggest up, find the biggest down, but let's just start with the biggest up. If you come over here, let's actually do a little reading. So if I started you here and say, what is the biggest, ugliest event on the chart? It just sticks out. I can skip everything. I see, look at the size of that thing. Going to need a bigger boat. That's the biggest gap. We know how to mark it out. Just grab the bottom third and let's observe what happens next. Do we come out? Did we take out any sellers? Do we take the gap out? Buyers hit it. We're reading. They're actual real buyers. We're reading. They hit it. Zoom. Crack. All right. So that's the biggest one on the board, and we can measure that just like a swing. It's about that big. Okay. We'll keep it simple. We'll just do up gaps here. Now notice there's a gap here. Okay. There's gaps all over this thing. There's a gap here. Is it the same size? No, it's that size. It's different. There's gaps, and so we're going to start to pick relative gaps out. You notice there's a gap here. It's a different size. All right. Now notice. See how this just sticks out on the board. Look at the size of this gap. Look at that. Wham! Is it about the same size? Yeah. See, I can watch this chart via these two gaps only. I can watch the price action just looking at these two gaps and how they relate to each other. Somebody did something here, somebody did the same thing here. And you can see later on how they related to each other. Boom, boom, boom. Now we're testing. What happened the last time we had a gap that went up? Well, it tested and zoomed. This one tested, and we're going to have to wait till the beginning of the week to find out. But I tell you what, with this map, all we have to do is watch. If it cracks, then guess what? We have a continued behavior. Right? Continued behavior. If this thing changes, we have a change in behavior. We'll have an idea about this market here. All right, so let's go do some practice on various charts. And now we're going to look at a few recent examples from the last couple days just to get a feel for what this looks like. This was just last night in the Aussie. So, for instance, you're watching the the Euro. Big day up. Rolls up, rolls up. See these bars? Just all kind of boring. We can read these bars with the price action key we had. But remember, we're going to look for, in this lesson, I want you to look for ones that stick out, big wide range bars. So as I'm watching this last night, I'm thinking, oh, this thing looks like it's going to roll over, come back down here and fill the gap. That's my projection. And notice it's fine to have projections as long as you're not attached to them if price tells you something. So imagine you're reading this. Price rolls over, it's boring, it's boring, it's boring, it's boring. Now, when we're looking at these significant bars, I'm going to show you what this helps do for you. You watch it, it's boring, it's boring. Okay, it's picking up steam. And bam, look at this. It's huge. Look at this. It is a wide range bar, and it's bigger. Not only is it bigger than the last three, it's bigger than anything. Right? Do you get the scope of this? It's bigger than anything until you get here. That's about it. This is showing us. Now read the chart with me. Forget projections, forget setups, just remember the questions. Forget lines, forget indicate, read it. Sellers came up, wham, or buyers wham, and sellers smacked them. See that? Came right up into this gap up here. Whew, smacked them right back down. It's huge, so we know how to mark this. We're going to mark this like so. Now note, I don't know which way this chart's going to go. For me, it looks like it's going down. That's the difference when you're trading. You don't know. You never do know. But look, you can read. All right, and you follow. Watch. Okay, here we go. Sellers knocked it. What happens next? Basically, do we come down and take out a low? Do we take out a high? Do we take out the tail? And you watch. See, this one bar is the key to any trade in this chart. You know you got sellers here. You know they couldn't handle the buyers here. All right, you might want to sell. Who knows? But you know they're there, right? You see them, feel them, right? They're there. Boom, boom, boom. All morning. Okay, they're still in here. They're still. Okay, getting excited. They're still in here, though. They're sellers. Get a feel for this. It's not a setup. Every day is a unique situation. Understand that they came down, came up, bang, could not make a new low. Now they're up here. They're testing these guys that were willing to bang it down here. It's the biggest bar on the board. This is reading. This is reading price action, not memorizing candlesticks. Zoom. Look what you just learned. Sellers whacked it, Buyers picked it up. Buyers beat the sellers. Here, you can make the story. Price is telling a story. Sellers whacked it. All right. Buyers picked it up. This is better than a movie. The original sellers got whacked themselves. And you can use whatever storyline you want. But you get the idea. Sellers smacked it. Buyers picked it up. These original sellers, boom. What happens next? Bang. Price makes new highs. Okay? Now we also know how to mark out gaps. Big bar, wide range bar. Just like this one. See, wide range bar, this gap holds. I probably wouldn't want to buy this one because the sellers didn't get beat. See, this is reading price versus a setup. I might, for the push through, but I probably wouldn't want to buy this one live because, the sellers are still here. But now what happened to the sellers? They're whacked. And if you want, you can draw on this chart. And if you want to do some further analysis, you can be doing swings as well. See, I got a swing. Boom. I got a swing. Boom. Are they the same size? You guys remember the swing work? See, now we're combining a few pieces to this price action. All right. Price is following those relative swings. Not doing that anymore. Price hits sellers. Price whacks sellers. Swing, swing. Meaning, don't chase it here. Swing, swing. All right, so that's how, whether you get the entry, don't get the entry, whether you get short, get stopped, get long, doesn't matter. Learn how to read this. It's a beautiful story that Price is telling. That's how the day ended. I'll do one more with outside bar I watched this morning in a gold tick chart for you gold traders. Again, we come over here. You come to gold. You might not have any idea what to do. You get here in gold. But it's really not that hard to map this market, whether you're using swings. One multi-pivot line can give you the whole story of this market. See? Boom, 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 zoom. This would be like a push trade in here. This would be like a type 2. This would be like a type 3. Now consider you just see the price changes directions, and you want to get down here and you want to read price action. All right, the swing's pulling back. You don't want to just maybe jump in. Maybe you see that you can do something on this base, but maybe you don't want to just jump in. But read the bars with me. Hard down, wide range bar, hard down. There's an urgency down. Skinny bar, skinny bar, skinny bar. Boom, there's an outside bar. Effort, whoosh. Effort reversed. What happens next? Now when I say what happens next, I want to know, can we take out the next swing, the controlling sellers? Yes or no? So we watch. Down, down. Haven't taken them out yet. Retesting. Starting to ease back through. Whacked, right? Hard up. You see, this is a hard up bar right through the outside bars, meaning this becomes like a small swing high here, meaning these sellers that sold it down. And you'll see this is often how pivots made. Pivots so often look just like this, just like this. All right, so you get the idea. So that's what an outside bar is going to look like in this thing. And then you can draw your median line in here for targets and whatnot. That's where this market closed. So that's using a bar to pick this out. Let's do one we can do live. Okay, let's come to our stock charts. Here we go. Good old Spotify, been going nowhere forever. Look at this week's close. Is it a wide range bar? Yes. Is it bigger than the last three? You can just look at the range. Yeah, it's bigger than the last three. Not that one, but it's bigger than the last three. Is it a tail? Yes. Let's mark it. And we'll use this to gauge this weekly market. We'll be able to follow it. So just to reiterate with this price action, it spreads the story out, meaning it's like swings. There's a lot of junk going on, but you get, oh, okay, little light bulb in the darkness. You see another one, little light bulb in the dark, and you start relating price to that. And minus the junk, you don't get caught up in